everyone. Thank you so much for joining us today. This is another session of ours of Pitch Perfect for TV, where we're going to help you understand different aspects and notions of pitching on TV from some of our experts who've been there and done that in the recent past. Today with us, we have Dhruv Kohli, the founder of Boba Bhai, a Bangalore-based and has out about 60 plus outlets nationwide. Since they launched in 2023, he pitched on TV in early 2025, turning primetime TV into an instant brand fuel. Known for data driven, meme rich campaigns and K pop collabs, Dhruv pairs his playful marketing with razor sharp unit economics, making him a go to voice on turning day to day metrics into investor ready stories. Dhruv is very widely and very immersed into the D2C ecosystem. So, not only will he be sharing his insights on pitching on TV, but a lot of the marketing and matrix that would go behind that. Dhruv, I hope I've done justice to your introduction. Feel free to add on if I've missed on anything.
No, I think you have covered pretty much all, right? Like, happy to give a quick intro, guys. Like, basically, this is my fourth venture. I had two exits before, been on the investor side as well, and now back to entrepreneurship again. And, like, we've been building QSR, consumer-led brand now, like, whether it's a QCom or QSR, for past, 19 months. And, we raised about nearly, 50, 60 crores in venture capital, right, from some of the top tier firms in India. But throughout my career, I've raised over like close to $50 million, approximately 400 to 500 odd crores in my different ventures. And, happy to, guide you and give you guys some tips on what's the best to pitch on TV. I myself was on Shark Tank. And then, there's a lot of learning for me, but, specifically, I would love to talk about it, what you should do when you're on the TV show. I think there's a lot of shows that's happening on TV now, like, on Prime or on Sony or various things. But yeah, today I would love to take your questions and, walk you through that, what we can do. But that's a little bit about me, what I've been doing for past few years.
Amazing, Dhruv. Thank you so much. I found us a quick format of what to expect. We will go in with a couple of questions. In the meantime, keep adding yours to the chat, and then we'll continue to pick up questions from the chat and anything additional that Dhruv you would like to add. So let's jump in. Dhruv, when you have only 60 seconds to grab prime time audience, what single marketing insight or customer aha do you highlight first and why?
Before I answer that, I would love to tell you guys what not to do. Guys,
Yes.
when you are pitching on the TV and you have 60 seconds, don't use any jargon. I see a lot of people come in and they say, like, they're building this, like they start with tech jargons. You're pitching to a normal public, right? Like, there's a few million people seeing, right? They don't understand that. I think in less than about I would say 45 seconds you should keep it, because it will eventually go to 60 seconds when you're on the TV. And how? Because you'll be nervous, right? Certain things like the breath is high and all that stuff. Whatever you rehearse in 45 seconds outside, it's going to go to 60 seconds on TV. That's one of the learnings I can tell you. And you're going to position that your business in a simple word. If you ask, what do you exactly do? And you should take an example that if you can explain your business to a 10-year-old or a grandma, that's what exactly you want to highlight on a TV. Because your audience on TV is pretty much everywhere, right? And the least audience that you see on TV is the tech guys sitting there and watching a TV show. That is the least. It's normally families, it's the people. So you want to tell them very, very simple, right? Like when we went on TV, like, I can give you an example. We were very clear. What we do, we sell bubble teas and Korean burgers and bring joy to people's life, right? So very clear proposition. This is what we do. This is, again, ours was very simple business. We do it. But if you're normally running something complex, or let's say you're a tech company, or you are, building an app, simply you say, you are doing this this is your audience, and this is how you solve it. Who, what, why, right? I think less than 60 seconds you want to explain it, because that 60 seconds is going to be remembered by everyone, even with the investors, right? And of course, if you go on any TV show, They need some mirch masala, as it's India, so they want to build some emotional story and all that stuff. So they will tell you that you have to memorize that certain script and all that stuff. But be very comfortable. If you cannot memorize that, please do not change your business for that. So I've seen many people, I've spoken to multiple people who say that, TV show guys told me to say this, but they don't know about your business. You are the ones who know your business. So do not change your business for them. Simply say what, why, who. That's what your audience wants to know. Treat these 60 seconds as a marketing that, imagine you're an actor, you got 60 seconds, you have a fan, and you're doing a promo fan and you're telling that why this fan is so good that you need to buy this. That's a simple example I can give you. Don't go into jargon. You are explaining to your audience why they should buy your app, why they should buy your product, why they should, associate with you. There is no need of saying anything else because, investors will have another 1 hour to ask you the questions. And believe me or not, investors also are a human, right? If they can get connect with your product, they're eventually going to buy into it. Only difference is that they may not buy the product, but they will buy the part of your company. So that's the insights I learned, right, while being on the TV shows.
Amazing. I'm going to actually go on from that. And Dhruv, tell us, why did you choose to pitch on TV? And what was one of the misconceptions you had about pitching on TV, which changed after you did?
So basically, why did we choose to pitch on TV? First of all, it's a prime time. It's a free marketing, right? Now, if I have to market to so many people, it's a huge cost. Now, regardless you get funding or not, that's a secondary part. But that platform is acting as a marketing for you. And that also is a marketing that the founder is going and explaining the product. Normally, people will hire influencers, people will hire actors, or you will pitch your thing through content and all that stuff. But here is an opportunity for you as a founder to go and explain your product, which you won't get it in many times. And imagine if you have to do this on social media, how much money you will end up burning for this, right? The biggest misconception is that a lot of people think it's all scripted. It is not. So be prepared for the questions because everything is real time. You don't get a chance to edit your questions. So whatever you say, you just said it and they will record it and position it on the TV. They're not gonna give you a second chance that, hey, sorry, you said it wrong. That's why the numbers are the key thing for us because there's no second take in it. You cannot take any notes. You cannot do anything. So everything has to be remembered by you at your head and you are answering for that.
Very interesting. I think what you mentioned, that it cannot be re-recorded or second take. Very often we aren't used to pitching on TV, and we expect that if something goes on video, we will be able to take multiple takes. From that, I actually want to go into that if founders can quote just 3 metrics on air, which one signal maximum credibility and the fastest to our sharks, what would it be?
Revenue, number one. Every shark wants to see a revenue. Growth, how you're growing and how fast you're growing. Third thing is the repeat rate. If you have a product, whether your customer is coming back to buy from you or not. I think these are 3 key metrics that everybody's looking at, right? I think in a normal business, that's what every investor is looking at. These are 3 metrics that investors, they're also looking at it.
And this would be across sectors.
This will be across sectors, unless if you're pre-revenue, right? Then you need to position them why your product is so good and whether you have any proof of concept that you already tested it with certain people, but they haven't started paying it, right? Let's say in the terms of somebody is building something like a social media network. Now maybe there's no revenue, right? But there's enough traction that how much time a user is spending on an app.
You do it by yourself or with the help of your team.
What is the LTV, right? And what is the churn? What is the weekly active user base you have? So that's something you need to memorize. If you are not a revenue generation startup and you're just starting out and you have a product which is no stickiness to app and all that stuff, right? Or if you are a product that is doing something on AI and all that stuff, what breakthrough technology we are building and all that stuff. But again, guys, one piece of advice: if you have something very innovative and you haven't started working on it and you are at a very idea stage or you're just in the middle of building, just don't go out on TV and say it, because that's not like, there's so many people watching on it. And if you're not ahead of the curve in building your own company and you just said it, somebody may come and take it if your technology is really great.
Sometimes marketing something that isn't at its peak can also be a disadvantage.
Exactly.
Got it. Dhruv, tell us that what's your go-to way to illustrate some of these metrics and things like gross margin, payback period, without drowning the panel of investors in just spreadsheet jargon.
See, basically two things going to happen. Investors going to ask you this question, and you will notice that one investor will ask you a question, and other investor will ask you the same question in different format, just to confuse you guys up and say that you said this before and all that stuff. You must have seen multiple TV shows pitches, and this is very common. I think you need to know your numbers at heart and be very clear and consistent with the numbers, right? Whatever you say, make sure you're not making it up there. You have the proof of that particular number, right? Although while you're there, you can say you're making, let's say, 70% gross margin, right? But in reality, when the investor is going to come and check during the release stage, you're making 60%. There's no point for it. So be honest and truthful as much as you can, right? Be very honest. Tell the exact numbers, and be sure that your answers are consistent. So it's not like in first 5 minutes you're saying something else, in the next 5 minutes you're saying something else, right? I think they're more looking at clarity, clarity of thought. How confident you are in describing your numbers, and how well you know your numbers. Because I think any investor who is investing in you as a founder, the one thing that a lot of these guys expect is that you need to be good with the numbers. Not all of us are from financial background, but I think this has become the prerequisite nowadays, that you need to know your numbers as an entrepreneur. If you don't know your numbers, it's a problem.
Got it. I'm going to go on to the next one and look at that when you shift from, your brand story, which is often emotional, which is often more from the heart and passion, to hard numbers. How do you keep the narrative flow similar so that it doesn't feel like two separate pitches?
So two things here, right? See, as an entrepreneur, you're always emotionally connected to your business and all that stuff. I think every time you describe your numbers, you need to be very clear and concise that how you're driving those numbers to the investors as well there, right? And always link it back to the brand, right? Like, for example, that, let's say I can say I have 50% repeat rate because people love ordering bubble teas from us. So again, connection back. Or if somebody is building an app, we have 10 hours of sticky time on our app every week. XYZ feature is being loved by most of the users, and they love to share it with their friends. So you're betting them, right? So that's where even the audience sitting in home is getting to know why that certain thing is used by why, and then also the investor is also getting to know why people are sticking to your product, right? As opposed to just saying that I done this. And if you are a revenue generating startup, I always tell that, let's say you're doing X numbers today, you can always mention, if you're a year-old startup, this was my number a year before, and we have grown over to 100%. Investors love to hear 200%, 300%, 400% growth, because it's all about growth. That's where they're going to make their money. On the opposite side, if you're degrowing, do not mention it, because that's going to act against you. So if in case your numbers are not great while you're pitching, and let's say your because investors normally ask for last 6 months number, and if you have done this previous month's numbers more and this month's number was less, you need to have a reason why your number is low. It can be a seasonal impact. It can be impact that you're upgrading your technology. It can be something that there were less funds, right? Something like that, as opposed to just saying that we degrew. There has to be rational, right? Why we degrow, and if we would have this particular favor with us, we would have grown better. So I think that's very, very important to link it back.
Got it. I think also, from what Dhruv said, it is your brand, it is your story. So the idea is to balance your passion, because that's how you've started it, and the numbers of how you're actually being able to run your business. Dhruv, what are also some mental cues or bridging phases that help you pivot a tough valuation or growth rate related query and bring it back to your main message when these questions come up?
See, you can always take your time when the questions are there. You can always ask for a glass of water. right? That is allowed in the TV shows. It's not like, I know sometimes we feel overwhelmed. All of us are human beings. Many of us has never faced the cameras before and all that stuff. The conversation happen in the closed room. So it's okay to take a pause. It's okay. Investors also understand that. It's okay to take a pause. No one is going to judge you on that, right? Why did you take a pause and all that stuff? Instead of answering wrong, instead of mumbling up and then presenting something else, it's better to take a pause and have a glass of water and restart again, right? There is no harm in it, as opposed to just passing on the wrong information. And I know the whole thing that happens is that sometimes they start drilling you down, right? Like, why this thing happen? As long as you guys just stick to your basics, right? Like, if you know that your numbers are right, you're saying the truth, you don't need to. And I understand not every one of us knows everything 100%. And it's very, very good to say when they ask if you don't know anything, sorry, I don't have an answer for this right now, but definitely if we go ahead from this, we can get back to you. And it is okay to say that. Even when we go to pitch to the investors, right, like in a closed room as well, it's not like we know everything, right? There are certain questions that comes in, and we also tell our investors, give us a day's time, we'll get back to you. We haven't thought about it. So it's okay to accept that, because nobody's gonna expect from you that you know everything 100%.
It's okay to be human, even if you're on TV.
Exactly. And I think the more real you are, the more better you can do it, as opposed to just trying to answer something, because that's gonna throw a negative thought at your business, right? Everybody's gonna remember that one negative thing as opposed to that 10 other positive things that you did during that pitch.
Correct. I'm going to keep picking up questions also from the chat on the go, Dhruv, but also coming to something that now goes slightly deeper into numbers. So the deal that you looked at, included an X percentage of royalty till a certain amount of money was recouped. So how did you weigh that, cash flow drag against the brand lift of having these marquee investors? And how do you think other founders should look at a similar aspect when royalty comes in?
Got it. Yeah, I am truly against loyalty, right? Royalty. I don't prefer anyone to give royalty. And, you must have seen Kunal Bahal saying this as well on the show, right? Kunal is a good friend, a good mentor. And because if investors don't have a risk, why should give the royalty away, right? The thing is that then it means you can go and take a debt, right? And give something that money back. Investor is also coming because you should have an equal amount of risk in the business as you guys have. You have put your hard-earned cash, you have left your job and started this, right? So if the profits started from the business, that profits has to be reinvested into business, right? So I do not agree with the fact of, royalty. And again, it's a call that everybody has to take. But I can tell you that this is not a standard practice in the investment market. You go to any angels or any VCs you raise money from, nobody will ask you royalty. This is the show thing that and I don't prefer giving royalty, because this is always going to hit your P&L. And upcoming investors like the VCs, they do not prefer that. They hate this. They really don't like that you have given royalty to someone else, because they want profits to increase for the business. They want the business profits to go back into business. So hence the business will grow. So I think if you get that, simply, say no, saying that, what, I don't think, we can give royalty at this stage. We are growing very well, but we think we need to put that money back into the business so that we can do more R&D, we can do more marketing, and hence we can grow the customers base and market share. How do we do that? We do only equity only deal. And I think 99.9% of times they are happy to do equity only deal. They ask you for royalty because they need some negotiation power. So they know most of the founders going to come back and say no to royalty, and they want to ask for more equity, or they say, okay, you know what, I already left the royalty, now I cannot negotiate the equity. So that's a tactic. So 99.9% of them are also happily willing to give away the royalty. It's just a tactic.
Got it. I'm actually going to pick up a question that I didn't even have in my notes from what you just said, Dhruv. What do you feel should be some of the negotiation powers that founders should have when they're pitching on TV?
See, first of all, you need to know about your industry a lot, right? Like if you're a consumer startup, you need to know what's the multiples that you are getting in the market. Is it 4, 5x, 6x, 7x, right? Depending. What is the average? See, there'll be outliers where somebody got very high multiple. There'll be outliers where somebody got very low multiple. So what is the average? And you can easily access that data online, right? You get to know that a company raised funding at X and look at the sector. Certain sectors are very high, multiples and all that stuff. So first of all, you need to know what you're raising for, how much you are willing to dilute yourself, right? It's a dilution. How much you are willing to dilute yourself? Will that left enough for you in the pocket to run the business, to give the ESOPs to the employees, to give equity to incoming investors, and how much you will get left with at the end of the day? I know a lot of investors will say you don't need to be greedy for equity, but believe me, this is what the founders are working for. We don't get paid high salaries. Equity is the only tool that we work for. So it's not about greed. I think it's about the fair share, right? So you really need to know the numbers. You really need to know what's happening in the market and all that stuff. Another thing is that listen to everybody's offers first, as opposed to just be think that let me say yes. The offer is not going on the table. If you're a great business, you're doing well. Every single investor wants to invest in you, right? So the thing is that listen to all the offers, see what it's coming towards you and all that stuff. And just don't take the deal for the sake of the deal, that you have to take the deal, right? And then, because although it's a less valuation and, you have to go back to board or something, don't do that. Find a number, like before you go into a TV, always do two things. Write the number that you want to raise at, and also write the minimum number that you are willing to raise at. Like, let's say you want to go and say, I'm raising 2 crores at 25 crores valuation. That's your ideal number you want to raise it. The next thing is that, what is the minimum number you are happy to accept this deal? You can say, okay, you know what? I am happy to accept 1.5 crore at 20 crores. And guys, one other thing very important to remember is that you go to any TV show, let's say you say amount you're raising 2 crores for 20%. Always remember that once you set that amount, investor cannot invest less than that. That's the rule of the TV show. So let's say you said 2 crore for 20%, investor cannot give you offer for 1.5 crore. Investor can give you offer for 1.5, that's 3 crores together. But total deal cannot be less than 2 crores than your ask. So that's something you need to remember that. I think there's in the TNCs as well of the TV shows and all that stuff. So always ask, and then it can always go up because investors always want some higher stake, but don't ask too high. Like you see certain people coming in and say, like, give me 25 crores for 10. That's not going to happen. The deal is not going to happen on the show, right? So be very careful in what you ask, and be ready in your mind that what is the least number you are willing to accept today to take this investment on board.
Got it. A couple of things that I draw from this is, one, be present, understand your industry really well, because you would mostly know your industry better than anyone on the panel over there. And that gives you the strength of not only talking about your own company, but about the industry and the opportunity as a whole. The second is listening to offers. So not getting overwhelmed or excited and picking one that's there. And the third that Dhruv mentioned was also that as a part of the TNC, do look at that they will need to offer you the same or a higher amount cumulatively than what you have asked for. Dhruv, this brings me to an interesting question, that is that when this is shot versus when this is aired is a couple of months very often. So
Yeah.
do you need to keep that also in mind when you're, talking about certain numbers and asking for a certain valuation and a certain amount?
See, not really, because according to investors, it's live at that time, right? And of course, for audience, it's going to show, air is going to happen after 2 months, right? And you don't know what's going to happen in your business after 2 months. So it's very hard to predict. But normally, the conversations, once you get a deal on the platform, the conversation starts happening after that 2-3 weeks, right? They don't wait for the show to air. In many cases, I've seen the deal gets done before the show gets aired and all that stuff. And this is one thing you can also tell your investor, you know what, like, we may get aired, and can we close the deal now so that we have enough cash in the bank to prepare for the customers that are coming. And most of the time they're happy with it.
Actually, that drives me to another question, that what are a couple of things from a marketing angle that you keep in mind pre-airing, and especially those 48 hours post airing, to make the most of being on TV?
So pre-airing, let's talk about the 4-5 steps. Before you go into any TV show, you have to get your own setup. And guys, be ready to pay for 50K, right? Believe me, they will tell you 2 days before, and if you try to get it yourself, It's not going to happen. Their vendors, you be ready to pay for 50K. That's what everybody pays, right? Second thing is that be ready to spend yourself 4 5 days. That's literally going to go off if you're pitching on TV. Rehearsals, all that stuff happens, right? Be very careful with your marketing material that is going on TV. Spelling mistakes. What are you presenting? Are you presenting your latest products there? Make sure it's not outdated, everything, because that's only one-time prime opportunity, right? Because I've seen certain people come with a mobile phone number wrong, website wrong. Like, this is the least you can do. Post-airing, right? Normally you get to know from the team that you're getting aired in about 3 4 days before. That's the maximum notice you get. But you get an idea that, like, the show is going to run for 3 months, and this is where, positioning is going to happen and all that stuff. Post-airing, the day you air, make sure you have stocks, because that's the day most of the people are going to order from you, right? Because they're the ones who will be going onto your website. Your website is not broken that day. You have enough stock. You're not out of stock and everything. Right? Another thing is that make sure after even airing of 48 hours as well, you keep refilling that stock and everything, because not everybody's going to watch on the same day. People are going to watch everything after and all that stuff. And be ready to handle your social media. While you get positive, there's also negative. And how do you handle that? How do you respond? Sometimes, because there's a lot of orders that many of us don't even expect before, right? The order surge normally goes 2 to 3x, right? So of course, the thing is going to break your ops and all that stuff. So be ready to handle that. Have people working a bit extra hours to ensure that you cover during that time and everything. But I can tell you one thing, man, your life will change post-airing. Like, you air on Shark Tank, if your pitch is good, or if you air on any other platform, your life will change. People do start recognizing you. It's one of those moments that where you have done something. And you know what? If you guys get through it, you should be proud of it. There's like over 1 lakh applications that comes in. And I think there's only over 300-400 companies that get a chance to be featured. That's not easy, right? Like, so if you get through, it's a moment of pride for all of you guys.
Really looking forward to a bunch of brands from the Rize community and ecosystem being across different TV shows in the coming few months, Dhruv. And that's one of the reasons we spend, time, and we're thankful to have mentors and partners like you coming on board for this. Another question I had for you is that what are some of the props, charts, or short demos are the most effective ways of making abstract metrics like retention, LTV, CAC memorable on TV, especially for the camera?
Sure. Carry your product, present your product in the best format possible. I think there's certain colors that they will tell you they are not allowed. I forget those colors, but there's certain colors that you should not use because they don't come well with the camera, right? The way you dress up, present your brand well, right? In terms of props, always, like, for example, we sell Korean food bubble tea. So our backdrop was full of Korea, so people can relate with it. Don't hesitate to spend money on that. Maximum is going to cost you 50K. Have a good designer design your prop. That's something you're going to do yourself. But I always tell people, do not, cut for 3,000-4,000 rupees there, because it's a lifetime opportunity. People are going to remember this for you, right? So if you get it wrong or right, this is going to dictate. So have the good designer, and believe me, it takes time to get the props approved, right? And you only have 2 days. Sometimes it gets overwhelmed that what you should do, your props are not approved. But take a breath, everything gets approved, because they are more worried than you, because their channel will be in trouble if props are not correct. So they're going to help you to get everything best. And a lot of people, what they do is that they put too many props and then the hero products gets hidden. So don't put too much props as well, so that the hero products don't get hidden.
Dhruv, what would you say is one of your most memorable entries of pitching on TV, either your own or of any other brands?
So basically, I'll talk about our own. So we are a bubble tea brand, right? And we thought, what can we do different, especially in the first 60 seconds, to ensure that the audience gets relate with it. And, we were thinking, and, because bubble tea is a very new concept in India. So, there is a gun, bubble gun, that we used to get into the fairs and all that stuff. So we carry those 2 bubble guns. And as soon as we announced the name Boba Bhai, so we threw the bubbles with those guns. And that was the thing that became because people can relate to it, right? And that became something out of box. A normal pitch is going on, and somebody's carrying out the gun. And see why it relates to us here. Our brand name is Boba Bhai, right? And we are carrying guns into a shop thing. So that was the moment for us because the brand name is resonating with it. So and you know what? The team helped us curate it. They got it. The brand name is Boba Bhai. There's a word Bhai in it. Bhai means underworld in Mumbai, apparently. We have no links with it and all that stuff. And then they said, there's a bubbles in it. How can we relate both? So they said, let's carry the guns with the bubbles. And, we use those guns to blow the bubbles. But that really gave us the moment at that time. Like, that was 4 second moment was great for us.
Amazing. Dhruv, I'm going to dive deep now into the questions in the chat. But founders, this was a quick roundup of the importance of when you're pitching on TV, understanding that both marketing and metrics are both important. They have to go hand in hand because you do want people to know how you're doing as a brand, but you also want them to remember you as a brand. And like Dhruv said, your life is going to change, your brand's life is going to change. So make the most of being there, even if it's a little extra spend that you need to go into. So, Dhruv, we've got one question on how do you come up with valuation? Is it a standard 5x of revenue, or a company with about 5% EBIT is obviously less valued than one with a 20%?
Yeah. So see, it truly depends on investor to investor, guys, right? And it also depends on the investor. Let's talk about the valuation on revenue standpoint first, right? Now, if you're building a consumer brand, it can range anywhere from 4 to 8x, right? You're building a tech company, it can go up to 10x as well, right? It truly depends on the industry. I would say the best part is that there's a lot of data on Traction. It's a free account. Go to Traction, figure out how much valuation they raised, they got money, especially early stage ones and all that stuff. And also in the early stage, investors also look at that you don't want to dilute 20%. How much money you need to get through a next round. So normally that gets in, let's say people come in and they say they need 4 crores to go to next round. So the valuation can be like, you will go and dilute 20%, right? That's a standard number in the market. But you guys all have access to ChatGPT. You can get to know through the valuations, the multiples of your industry or your competitors through that. But every industry, every business can have a separate multiple. Coming on the EBITDA, see, honestly speaking, if you're raising for VCs, especially if you're early stage startup, they are not looking at EBITDA and the valuation don't change with EBITDA, right? It's good, you're profitable, but they also know that as soon as you start to scale, you take money from them, you are going to burn money because you're going to go and acquire the customers at a faster pace than you were requiring before. And all of us have done it, right? Like, I can tell you before taking money from VCs, we are profitable. We're running only like 3 stores. But as soon as we take money from VCs, the goal is that how do you expand from 3 to 100, 100 to 500 and all that stuff. Now, while doing that, you're going to spend some extra money and it is okay as long as your unit economics is positive. I think in early stage, the investors are looking for unit economics. You should not be losing money on the unit economics. Every product that you sell, that shouldn't be losing. But at the same time, your EBITDA should not become a hindrance for the growth. It's not like you're making, let's say I simply give you example as 5% or 20%. Let's say this company A who's making $10,000 and their EBITDA is 20%. That means $2,000 EBITDA. And let's say company B who's making $200,000 and EBITDA is 12%, right? And I can tell you, investor is more likely to invest in company B, although EBITDA is less, but the revenue base is much larger. The product market fit is much higher. So that's what the investors are also looking at. Because they're looking at PMF, right, at early stage, more than EBITDA. EBITDA is more about private equity, right? The day when you raise Series C, Series D, that's where the EBITDA looks at it. It is important, but not at the cost of a growth to start with. And of course, if you're bootstrap, go for EBITDA.
Thank you so much for that. Founders, Dhruv also understands the investment ecosystem quite deeply himself. So we will be picking up a couple of more questions, Dhruv, for you on that. That one, when is the right time to raise and what is the best way to raise, right? Is it through VCs? Is it through TV? Should debt be an option?
Sure. So I guess, guys, the best time to raise is that, first of all, forget anyone is going to give you money on an idea, right? So I know a lot of people think they got it. The person who gets some money on idea is either a 3rd or 4th time entrepreneur, where the VCs have made money from him and they'll be happily writing a check without even thinking about an idea. right? What he's going to do, because he has made the money and there's enough trust. They're betting on the people. If you're a first-time entrepreneur, right, you're going out there, you need to have some PMF, right? Some product market fit for the investor to showcase, right? It can be as little as 5 lakh rupees in revenue. It can be like if you're an app, you have like 5,000 users and all that stuff. But definitely investors are looking for that, right? Unless you're a third or fourth or second generation entrepreneur where you already done it, you made your VC's money, and they'll be happy to put money to you. Man. They won't even ask you what you're doing. Like that's not even, they're very. In terms of the next one, sorry, what was the question? When is the right time to raise after that?
What format? VCs, TV, debt?
I think if you're early stage, the first check you want to get from angel investors. Why angel investors? They are not only going to give you money, and this is why they call themselves angels, or we call them angels, because they want to guide you and they're going to connect you to the right amount of people. See, VCs have corpus funds, they have money to deploy, and they want to deploy in 10, 15 companies in a year. It's a full-fledged, thing for them, and they raise money from other people. That's what their job is. With angel investors, they have invested their own money. They will definitely help you to get connected to the right people, right? Make sure your next round happens. It's not like they're going to do your next round, but connect to the right people, help you in connecting with, let's say, you're building something on a FMCG part, like, somebody will help you to connect to Blinkit, Zepto, all that stuff. So first round, all that should be from angel investors. Now, on TV as well, if you're saying, most of these guys are angel investors, right? Yes, some of them run their own venture capital firms, but first check is going to come from angel investors. So raise from angel investors or angel groups, right? Like, there's multiple angel groups now, right? You can raise it from them. You can raise from angel investors because that's a faster way to raise money. The VC is generally going to look for traction before they give you a money. Although they say we invest in seed and all that stuff, but believe me, they're going to look for much more traction before they cut the first check, because they have things. Whereas angel investor is a solo decision maker. Look at the fellow founders, right? Like who have done in this industry, or in a different industry, who you think they can add value to your business, they can help you connect. Reach out to them, cold on LinkedIn, emails. I think most of them will be happily willing to reply. But be very clear and concise to them that what are you looking for, what are you building, and why you need them. As opposed to just randomly shooting out a message to everyone, hey, I'm building this, I'm raising money. It looks like, you just send this message to 100 people, and so that's not the way. Personalize it. Hey, I read about your journey, and I think you can help me in building this product, and it can be also helpful for your business in case if you're building something where they can be your client as well. More, you need to relate the conversation, right? Or get in. Best way to raise money is that get an introduction from the people if you know, because that is a faster way to get the response from them and a faster way to get a check.
Thanks for that, Dhruv. So founders, look at what stage you are at, and then go ahead and choose the mode. And the second would be to also understand that try and get a reference, because there are going to be so many people that references always help at least get a response, even if not get funded. Another question, Dhruv, going back to pitching on TV, is that when is the right time? If we're launching in mid-August and are currently, say, pre-revenue or early revenue, then should we be applying for these shows? And then how do I look at the valuation? So the right time, should I apply? And then the valuation at such an early stage.
Two things. You only get one chance to present. You don't get a second chance. You can't come back again. Very rare. It happens that you get a second chance to come on the show again, but I think very, very rare. The thing is that, like, I always say, if you're going to TV, at least have your product ready. Have your product ready, have some early users who are using your product and all that stuff. Even if you're still in building stage and you think the product can be launched in next 2 months, don't go. Because you're just wasting an opportunity. You can go and apply for next year. It's never too late, right? But you want to enter in with the full force, then make sure your product is ready. You have users who have tested your product. You want to pitch to these people once, right? Because that's not something you want to go and say, you know what, like, we're still building our product. It is not ready yet, but you know what, we can make it ready in 2 months. That's not something is going to work. Neither that is good for marketing, neither that is good for investment. You're just going to go and burn money there, right? You're going to spend 2.5 lakh rupees in the whole process, right? And I can tell you how it all gets spent: sets, props, you know, the suits, dresses, travel, everything, advancement, right? So if your product is not ready, instead of going and spending time for 2 months for getting ready for TV, you should better spend those 2 months on product, get it better, get the uses, and then apply next year. This is going to happen every year, right?
Got it. It's important to pitch a ready product, the best version possible, because you get only one opportunity and you have the whole country, if not parts of the globe, noticing you and the brand. So if you're getting that marketing, publicity, and opportunity, then make the most of it at the right time. Don't hurry into it. Another question, Dhruv, is that is language a challenge? Can it be only English? A lot of founders have, and we've heard this, that it's very important for it to be Hindi, English to a certain extent.
I would say use a mix. If you cannot speak full Hindi, use a mix, right? I cannot speak full Hindi, I still use them. Why? Because people from all over India are watching it. Not everybody is fluent in English. You don't want to lose your audience on that, right? And I think this also shows guidelines that you have to use Hindi and English together, English. So try to use it, right? I know there can be challenges, but adjust it, make it, even if you're using English, then make it super easy. Don't use jargons. Make it easy that a layman can understand. But if you can mix it up, that's the best.
Got it. Dhruv, any tips for, say, an tech, medtech startup? No, a startup not maybe in the D2C space when they're pitching on the marketing, on the metrics, on any other form?
Sure. So specific to medtech, right? Like you're solving for the patients and all that stuff, right? Great marketing platform for you if you're doing something to attract patient or a consumer at the end instead of hospitals and all that stuff. Make sure your pitch is very crisp and clear and very simple to understand that your end consumer can understand, right? Now, a lot of these startups can be at early revenue stages or maybe no revenue, but they can have a great technology that they build. So this can be a great platform for you to showcase your prototypes. So if your prototype, carry along with it, right? You build something that, is workable position, carry along with it. And if you're a deep tech startup, it is okay to go with a no revenue, but full product, right? So that there is enough, and there are people that will be willing to fund it because you have great mind, the technology, and somebody will come in and say, you know what, I'll invest X amount of money to make this product work in the market. So definitely, if you are a deep tech, take bet on it.
Got it. Dhruv, another question is that, do we need to be very unique in terms of a product and competition while pitching, or are there other aspects that can help you get selected?
Your product, what you're selling. You don't need to make it. So a lot of people make simple product, very jargon and all that stuff oriented. Pitch your product as you're pitching to your consumer. Believe me, like I always say one thing, there is not a single, the business is not ruled by one company, right? Right? There is Swiggy, Zomato, then there's Rapido, then there is, Magic Pen. There's a multiple apps to order food from, right? Same with the ride share as well, right? Which all of us use is Uber, Ola, Rapido, and few others. So it's not like you have to change your business model, because be very clear, be very thin, and also like if you have a differentiation point, then highlight those differentiation points. Why you are better than X, and always try to refrain from naming the competitions on the TV. It doesn't send a good signal, right? You don't want to name your competition, and you don't want to go and say why you are better than, let's say, Swiggy, or why you are better than Zomato. You don't want to say that. You can simply say this: why are you better in this industry, and what you have done to be better as opposed to your competition. Investors are smart enough to understand who the competition are. They may ask you a different question who the competitors are, then you can touch base on that question. But do not come directly saying that, what, I'm better than this company because I'm doing this. That is not a great sign on the thing, right? Like you simply say, we are doing this, but our competitors are lacking in this, or we are doing this better, but without naming the competition. And in the next question, if the investor asks who's the competition, you can answer that question.
Got it. Founders, we will be picking up some of the investment related questions, but anything else that you have for Dhruv? We've got about 10 more minutes. Make the most of it. I know certain applications might be closing by the end of the week. Some of them will happen on an ongoing basis. In the meantime, Dhruv, there are multiple of these shows, right? There is Startup Singham, there is Shark Tank, there's Vault, there are a couple of others. So when you looked at pitching, which ones did you consider, and did you find, a difference of pitching on TV different for each of these?
I only consider Shark Tank India because I think they have a wider reach. Everybody
Mhm.
watches it, right? And I think they have, and I think Shark Tank is also a known format globally, right? In US, Canada, and all that stuff, right? So I personally think that first opt in and put all your energy in getting into Shark Tank. But I know everybody can't get in through. But then there are other shows as well that you can get in. But Shark Tank, I think, can give a really boost platform. That's the only one I looked at it, and we got into that. That's the only one we applied for it.
Got it. Uh, we have got a couple of other questions. So, Dhruv, when we write our applications for Shark Tank, the first round, are there any recommendations in making the application effective from the very start?
Yes, be very clear and concise, answer everything very truthfully and honestly. And the other thing is that, like, post you get into this application, you have a video, right? Video, I sort of you have to make a pitch video and send it, right? But before that, when you're writing the application, few things that you're really gonna take care, make sure there are no spelling mistakes, right? That's a very basic hygiene check you want to do. Make sure you include all the information. If you're multiple co-founders, include the details of all the co-founders and everything, right? Choose choose the right industry of your business. Do not copy paste from Chat GPT. They get to know this. Believe me, there are experts sitting here. So please write in your own words, guys. That is the last thing you want to go into application because it's very normal. Everybody uses it now, so everybody knows where you have written it from. Don't use too much fancy words, but more about explaining the business clearly because that they are also humans, right? People who are think of this: people who are processing your applications, they're not VCs, right? VC is going to come at the end stage, investors going to come at the end. They're normal people, so they need to understand your business, right? They need to really understand your business. So make it very concise, clear. Do not copy paste from here and there, right? They will ask more questions about your business, right? Have the things ready about your business. They may ask for P&L and all that stuff and everything. The data is secure, so upload the right thing, right? And once you get selected, you get into a video stage where you'll get a chance to present yourself in a video pitch. I think that's the most important part because that's where they're going to see that how you present here and whether you can add a value to their show. Again, at the end of the day, they also need to make money from the show.
Definitely. Founders, it's important to realize that when you're pitching on TV, it is marketing, it is fun, there are multiple aspects, but the most important word over there is TV. You're pitching on TV. So it's critical to keep that in mind. And Dhruv, that brings me to a question that, what are some of the specific call to action points did you line up so that viewers could act immediately and some metrics on how that converted? So say QR code, website banner, any of those things that you kept in
So I
mind.
think now Shark Tank also displays the subtitles underneath, right? So we clearly mentioned where you can order us from. You can order us from Swiggy, Zomato, or Blinkit and all that stuff. Products. What are those products and all that stuff and everything. Highlighting those products. What are the top sellers? Why people love those so much? I think having a clear call to action for that, having the you can find us on www.xyz.com or you can find us on Swiggy Zomato. We are available in these cities, right? So that is very, very important. We have to be very clear of speech in mentioning these, right? Specifically the website one, because you don't want to fumble it up. Like say it's so fast that you cannot capture. So very slowly you can find us on this, but it should not look like a market, right? So basically, let's say now you can simply speak to investors ask where your sales come from. You know what? Our sales come from Swiggy and Zomato. This is where most of our customers transact with us. But we also have our products listed on Blinkit and Zepto. Not only that, some of our sales have come from our website, which is www.bobabhai.com, and I'll show you how it looks. So you have to answer that. So it's not like you're directly marketing, but at the end, because that's not allowed, you're also letting your consumer know that this is what's happening.
Amazing. I love how you've crafted it into so seamlessly talking to both the investor panel and consumers. together and weaving that in. And founders, I think it's very important for you to practice this, speak to some of your peers, speak to people around while doing this. We will also be sharing some of these tips. Dhruv, another question was that the biggest difference in pitching, in your approach to pitching, between say an offline focused something like Boba Bhai itself versus say an e-commerce or a D2C focused say beauty brand or in the BPC space.
Yeah, see, we are also online because we sell on LinkedIn, Zepto, QCom, Amazon, everything as well. I think here the investors are going to more talk about what is the CAC, cost of customer acquisition for you. What is the LTV value, lifetime value of your customer? You need to memorize those things. What is the LTV? You calculate that. What is the CAC you're acquiring? What is the repeat rate of your customer, right? And you know how many orders they get from you over a month, over 3 months time, and all that stuff, right? I think these are very, very important for the e-commerce part specifically, because that's what is the traffic, what is the conversion happening on the traffic, where the majority of sales going to come from. Is it from your website, Amazon, Flipkart, and all that stuff? If it is coming from your website, what is the ROAS on ad spend, return on ad spend, right? Which are channels you're using for marketing, right? So they're going to literally ask those questions, and sometimes they'll start using jargon as investors. What is the ROAS? What is the LTV? What is the CAC? Just simple things you need to memorize as an e-commerce player. That they will ask these questions. That's like must, because they want to know that what is the value you're creating, what is the value customer is getting, and how much money you're burning, and all that stuff and everything, right? So what is the refund rates? What is the return rate? How are you handling those return rates, right? Whether you are an SOR model with these platforms, you have sale purchase model, all that stuff. So that's something you start memorizing those terms, right? And then that's the only way, how many user sessions you have on your website. Everything is going to come from the e-commerce, and you're going to memorize those, and then that's where the investors are going to ask you these questions.
Got it. Another question that's come from our founders here is single founder versus multiple founder. Is there a preference when you're pitching on TV?
Not really. I was a single founder. I know people who are multiple founders as well. It's exactly like, you're doing the business. So there is no preference, right? Like, I don't think they differentiate on this.
Got it. Dhruv, another one is that, in case your application to pitch on TV is in the first round rejected, say this year, then can someone still apply next year?
Yes, you can.
And any hacks on this? So I was speaking to a couple of founders about, say, a year or two ago, where they said that there's also, the more number of times you fill the application form, the higher probability. Is this something that also exists?
Not really new, because they have tweaked their algorithms accordingly now, because there was a hack before and all that stuff. But the thing is that, right, like there's a couple of hacks that we saw it as well. The earlier you fill your application up, the higher the chances are, right? Because they start reviewing the applications as soon as it comes in. They're not going to review the application when the application is closed, right? So it's a thing, right? You fill it fast, you get it fast. They also have a quota how many people they can call it, right? They can't call everyone in. So fill in fast, get in fast, and all that stuff and everything. The more traction your business has, the more likely it's going to select. So mention growth rates. It's all about what you present your business to. No business is bad. I'm sure when every one of us is putting a time rate, no business is bad. It's all about how you present. So key metrics you're gonna mention in your pitches, that like even while doing application, what's the growth percentage you have, what's the revenue you did, how you're growing over the last 3 months, how you did it bootstrapped, how you did it with the funding, all that stuff. Talk the story, tell them about it, tell your achievements. Don't shy away from telling the achievements in this. This is a time to showcase your achievements.
Got it. One aspect actually, Dhruv, that you mentioned, which I would like you to share a little bit more on, is that we've spoken about marketing, we've spoken about brand metrics, right? But do you feel that, in your pitch, in your application form, there's certain things about a founder as a human being from, say, an achievement or any other point that also holds a lot of weightage?
A lot. I would say more than a business, right? Because at the end of the day, people don't invest in business because it's a great idea, right? Anyone can have a great idea. So what the person, whether that person can execute that idea or not. That's what I think most of the investments happen, 100% in fact, right? You can have a great idea, but if you're not a great founder, investor is not going to fund you. So while you are filling up your application for a TV show, make sure you boast your skills, what you have done. Maybe you have worked at some, great companies, your Accepto, your Explaingate, your Zomato, right? Or you would have passed out from a great university with some great marks. You would have, crazy projects that you have done while serving as a society president in the university, right? You would have done some extracurricular activities, right? Mention those things. It's your time to showcase you. It's about you, right? The more you talk about you, the more likely chances of you getting selected. Like, although, let's say you are a 21-year-old fellow getting into Shark Tank, you don't have much experience in the workforce. So talk about your achievements in school, university, college, what you have done, right? You know what, like you have done certain X things, and this is how you been things. Talk about hacks, right? What the hack? It's not like hack cannot be just hackathon that you just wrote a very good code. You know what, like you use the system to your advantage and all that stuff and everything, right? This is how you've been. It can be as simple as that. While studying at university, I ran a small tutoring business where for my pocket money, I was just tutoring 3-4 students. That's a business you did, right? So you understand, you in that business, you got the business development because you got the students to come to you for study. You understand your finances, you know what you charge to those students, right? So that's a business you did, right? Although it's a 4 people tutoring job that you are doing. So start highlighting those things, right? And why you're the perfect fit and all that stuff. You're gonna sell yourself, right? Like that why you are capable of being on there and what you have done better than others to be there and get the best out of it.
Definitely. Dhruv, another question that has come in is that do you really get time and assistance from the investors that put in money on TV, especially on things that they mention like supply chain, their network, a lot of other
I'm
aspects?
very honest with you, and I would like to answer this very honestly. I also angel invest in multiple companies. I invest in about 50 to 60 companies now. If I will say that you'll get a lot of time from any investor, it is a lie, right? See, any angel investor or any guy who's sitting on TV is also running his own business, right? So yes, he may connect you to people for like 15, 20 minutes. He can jump on a call with you in a month. But the thing is that at the end of it, it's your business. You are the one who's going to help yourself. Yes, you may get the connects, right? Connects is the one thing you can get from these people. But apart from connects, maybe 15-minute a call, at the end of it, it's your business, your problem, you got to solve it. Because all these guys have invested in so many companies. If they start dedicating time to each one, their time is just so limited.
Very true. I feel it's important to understand who you're actually pitching to, who you're getting on board, what your expectations from them are, but always be aware that you are the founder, you are building the business, and you're the one that needs to ensure that it runs seamlessly. Support can always come in. I know we're almost at the end of it. Dhruv, anything that you feel that, I know we're a couple of days away from one of the deadlines. Any last thoughts, or actually, what are the top 5 things you feel are very important while pitching on TV?
So be very honest in what you say. Once you say, you cannot take it back, right? Second thing, do not get fumbled up like when they ask you tricky questions, right? Believe me, guys, you know your business better than them. That's always one confidence you got to walk in that. You know your business and you know everything better than them, right? Third thing is that, right, that you literally gonna come in and all that stuff is specifically be very concise and clear, right? All that stuff, right? What you say, how you gonna market your product and all that stuff. Fourth thing, when you're filling up your application, right? Make sure you get someone to proofread it, right? Because what happens is that when you're gonna fill it up yourself, everything looks all the words same, right? So get someone to proofread it, no spelling mistakes and all that stuff. Last thing, if you get onto it, be proud of yourself and make the best part of it. Because don't hesitate to showcase, because that's the opportunity you own it, and that's what's gonna bring you more business. But please stress on this again, proofread your applications. They are not like any spelling mistakes is going to get rejected straight away. So you don't want to lose your chance on spelling mistakes.
Very important to have your basics in place. Thank you so much, Dhruv, for making time, being so excited to be on this with us, with our founders, and being part of our Pitch Perfect for TV initiative. We look forward to your support a lot more with our founders in the community and beyond. Founders, any thoughts, anything that you've learned, feel free to either drop them if you're part of the community or on LinkedIn. And all the best for your application for pitching on TV. As and when things do work out, feel free to keep us informed. We're here to support you with traction, to support you with everything else that you require. I've also dropped a link in the chat for you to access all the resources that we've put together to pitch on TV. And Dhruv, thank you so much yet again for being on this with us.
Thanks a lot. Thank you. Really appreciate it. Thank you. Thanks a
Thank
lot.
you. Have a good day.
Thanks. Bye.
Thanks.